Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This will be that's the cash market. So I guess we can go ahead and look at the cash market because of some interesting setups that we have. Of course, we're still long-term bullish on the market, as you can see with the last print of 1108.63 in the S&P 500 cash market. This is our discretionary trading. These are our official market timing biases, and we tell you when to go long, when to go short, and when to exit the market with neutrality. And as you can see, our calls over the last 16 months have garnered approximately 600 points. Actually, a little bit more than that, with our open gain now at 150 points or so, just shy, probably about 148 points. Actually went long, bullish to the bullish side at 961 on the S&P cash on this breakout, as you can see right here. And it's been a beautiful trade. We had a little bit of choppiness right here, a little bit of some uncertainty, if you will, but it was just a dangling participle. No two consecutive lower closes. Not a single close does a trend make, so we continue to remain bullish on this little move. But look at all these beautiful setups right here, just buying opportunities. Buy right there at the trend, buy right there at the trend, buy right there at the trend, and it's been particularly profitable. But of course, we've remained bullish and maintained our bullish exposure since the breakout of 961 on this day, July 23rd. Where are we now? Well, we're still bullish. There's really no reason not to be bullish, as you can see. From a price technical perspective, we've just broken out above the 1100 level, and trying to hold the breakout. If we get below 1069, obviously 1070, certainly 1050, with a congruency of price technicals, horizontal as well as trend following, certainly we'll probably be back to neutral. Below 1050, we'll call it, and certainly below 1000, the very significant and psychologically round level of 1000 in the S&P cash, along with converging with the mother of all trend following support resistance measures, this green line right here at 1006. So right now we remain bullish. There's no reason not to remain bullish. And if we look down here at momentum, you can see that have some divergences, but the trend is just too strong. It's just been eating up the divergences left and right. Will it eventually break? Certainly. But right now we have no reason to believe otherwise, as we remain short-term bullish. Let's scroll out a little bit so we can see that. Short-term bullish in terms of momentum amidst an intermediate-term bullish bias as well. So save the small less than influenceable divergences, we're fully bullish in terms of momentum. In terms of directional movement, we also have short-term bullishness. As you can see right here, as the blue line has overcame the blue as well as the gray, or the red as well as the gray. And we also have intermediate term support. Arguably, we're going to hold for neutral right now. As you can see right here, we're going to hold for neutral right now in terms of the intermediate term supporting the directional movement of the market, because it's been a little bit choppy, as you can see, with the result of this nice little sell-off there. Certainly a trading opportunity. That nice little trade has led to some arguable choppiness there in the market, but all in all, officially bullish. We do remain below 1070. We'll get a little concerned. Look for two consecutive lower closes. Probably move to neutral below 1050. And certainly below 1000, we'll be back to the bearish side. So that's a quick look at the cash market. I actually want to give you a little bit of insight here. It's just something we were looking at and noticed. Now, of course, we have Thanksgiving. This is Wednesday, the day before Thanksgiving, and in the U.S. equity markets on the day or the Monday following Thanksgiving, kind of an interesting pattern has emerged. And if we scroll back over here, you can look. This was Thanksgiving of last year, '08, and look at this Monday session right here where this red arrow is. Nice little ET sell signal right there. We had an open of 888 and a close of 816. Wow, that is impressive. That was a huge move down. Huge move down. This is, of course, the Monday. Well, are there any technical significances of this, time cycles or anything like that? Well, if we look at the Thanksgiving prior on 2007, we'll scroll over here a little bit. Here's another arrow. Lo and behold, this was the Monday following Thanksgiving. Another. Well, let's just zoom out a little bit, shall we? And where'd you go? There you are. Beautiful long setup, right, or short setup right there. Opened at 880. Oh, that's one we were just looking at. And Yeah, that was the one we're just looking at. So let's look at '07 right here. Another open 1440 and a close of 1407. Wow. Pretty strong setup there on the short side. So that's two huge bars. Well, I mean, that's two bars. I mean, we can have two lower closes, right, in any market. Well, let's go back and look at '07. Boom. Monday right there. This, of course, is a minute uptrend. This is a minute uptrend at a nice sell-off. The Friday was actually lower. ET sell signal early on Friday, and then the Monday opened at 1400 and it closed at 1381. So it's 20 points right there alone. So some night. Well, that's three in a row. Wow. Well, I guess it can happen. Well, let's look at '06 right there. You can hardly see that a little bit right there. '06, the Monday following Thanksgiving, opened 1268, closed 1257. Nice 10 points. So it's 4 consecutive days. So a nice little pattern emerging there. I thought we'd give that to you. And all you got to do is sell at least one mini S&P futures contract short on the open and just cover it on the close. Let it go. That's on the Monday. We'll see how that trade. We'll see how that trade works out. Hopefully, it makes you some good money. But longer term, this is of course how we've been on the market from a discretional perspective. We'll go ahead and minimize that. We're going to look at the chart of the intraday dynamics, where we're likely to head intraday. Kind of always want to give you a gauge of where the market's going to move. Well, we've got some interesting setups today. As you can see yesterday, this is of course Wednesday, Tuesday, and Monday. We'll actually go back and look at Monday. So we had some bearishness on Friday, as you can see, bearish, and the market just really wasn't able to garner any move higher. We had that bearish gap to the downside, came back up, filled the gap, and just chopped around, given the bearish move, suggesting the market wouldn't go higher. And surprisingly, it didn't go lower. Why didn't it go lower? Well, we had a bit of a divergence there. As you can see, it was extremely bearish on the Thursday. As you can see, and we had some actual green, some shades of green bullishness early in the session, and just kind of trailed along, but it was a positive divergence. And of course, once we got the higher open, that was green as well. So that's bullish. Came back to retest the trend for the buying opportunity right there. So that's definitely a good buying opportunity right there at 1100, 1104. But it just didn't really play out. Why? Because look at this. We had full green and just came back to the red side. So by the time we're testing right here, we have red, bearishness, decelerating bullishness right there. By the end of the session, it was almost all gone. So we had just one indicator suggesting save the trend, that the market was likely to go higher. So then we go over into this week. We have Tuesday, just very choppy and whippy moves, as you can see. But where we stand right now, we are officially bullish, and here's a great buying opportunity, 1107. It's kind of a diverging indicator, but we do, because as we do have a crossover here, not it's diverging there, kind of a negative divergence. So not the best buying opportunity, but certainly a buying opportunity, 1107 there in the market. So how have our portfolios been? We are running out of time. Well, we've had some drawdowns lately. Let's look at this right here. Look at this. We've had some drawdowns lately, as you can see. The Matte Black has had the worst. It's the most leveraged at minus 30% over the last 14 days. And actually, we've had a drawdown of $15,000 in our MAP DT version 4.0 HR. So as you can see, just looking back at September the 1st, we had a nice run of $15,000, but then we had a drawdown of $15,000, right back up to $15,000 and a drawdown of $15,000. So definitely a great buying opportunity for the MAP DT version 4.0 HR as it's channeling. We're buying at the bottom of the channel. I mean, this portfolio is obviously going to break out and make new highs. So where do you want to be participating in it? Do you want to buy up here at the top of the channel and expect the breakout, or as a trader, chartist, you want to buy down here? Well, this is where you want to buy. So just a great opportunity to get involved in the MAP DT version 4.0 HR. As you can see, most of the drawdowns have been contained to the $15,000 level. We've had some extremes at $20,000, so you can wait another $5,000. That would be an outstanding opportunity to get involved. But right now, on average, this is a great opportunity to get involved in the MAP DT version 4.0 HR, particularly given that the recent drawdowns, as you can see, these two right here, have been about $13,000 to $15,000. 13,000. So historically, most recently, this is the best opportunity. If you're interested in that, go to the website, chat with the support team, shoot us an email. You can add it to your cart, and if you enter promo code VIDEO, you'll save an extra 20%. I hope you guys have a nice Thanksgiving, and we will see you next week.